In this presentation, we will discuss an overview of tracking tax deductions for personal items within our business account using a classes method. In other words, our objective is to take those items which are not business deductions, but which we want to track because we want to be able to provide them to the tax preparer at the end of the year, which may be deductible on our personal income tax return, but not as part of the business. And see if there is a system that we can use our QuickBooks file that we are running our business accounts in to help us to track these items while not messing up the income statement and the financial statements of the business. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Remember, our goal here is to have our business income. That's generally where we're going to think that our sole proprietor is making money. And usually we're going to have to take that money out of the business, put it into the bank for the personal owner, and then use that money at some point for personal use. This way we're keeping the business separate from the personal, and that will help us to do the accounting, track the accounts. It's going to be that way in our bookkeeping system as well as in the bank statement, which is nice for this format. What we would like to do is think of a way that we can track some of these items, the ones that we want to specifically track for specific reasons, such as taxes, in the bookkeeping system possibly, because that's where we do a good job of tracking items. In order to think about this method, let's first think about a time when we may pay from the business directly to personal items. And this happens often, so we want to keep these two things separate in some way so that we can keep the bookkeeping separate, but it's quite possible that oftentimes we pay something out of the business checking account. If that were to happen, if we paid out of the business checking account for personal items, how would we record that in our system? Well, when we put it into QuickBooks, then we're just not going to put it on as a business expense. We should put it on the books as a draws to the owner. That's going to be a typical type of transaction. It's not as clean from the bank statement standpoint because now we have business and personal items going out of the bank statement. But when we put it into our books, we can still make that separation. Say, hey, these are not affecting the income statement. These are personal items, and therefore they're going to be recorded as draws rather than business expenses. So these types of things happen. Now we want to think about, well, how can we do this maybe intentionally in some cases so that we can then track certain information such as possibly childcare or education or health insurance or medical costs, maybe some of these items that we might want to track in a more efficient way. So one way to do this is to use the classes feature within QuickBooks. So we're going to show just kind of like the end result. What would the financial statements look like if we were to use classes in this format to pull out those individual items that we could still track within the system, but in a different way, in a different format, and using different classes. To do that, let's take a look at the profit and loss report. So we're going to go to the reports up top. We're going to go to company and financial. And let's go down to the profit and loss. We're first going to look at the profit and loss by class. So this is what we're going to set up, these classes, profit and loss by class. If we take a look at that item, changing the dates to the range we will be working in, 01/01/19 to 12/31/19, that's January 1st to December 31st, you'll note that we have a profit and loss and then these two columns here. These are going to be our classes. So we have the first class, these being our business related items. That's what's typically we're going to put in our system. And, all the time, whether we had classes or not, these would be our business-related QuickBooks file items, income and expenses. And then we have the tax deductions for the personal items that we want to specifically track. And so what we've done is we've intentionally said, we're going to pay these specific items, such as possibly charitable items, such as possibly the medical expenses, such as possible childcare, these items that might be something we need to track for taxes intentionally out of the business account, but apply them to a different class so that we can break them out and still have that separation between the business and personal. So here we have that. So we have the business on this side. We've put all of the personal items then in this example under other expenses and grouped them under a subcategory of personal deductions. So we have personal deductions that we wanted to intentionally track in this format. We've got personal deductions for charity, childcare, college, an IRA. I'm going to make this a little bit larger. Medical costs, medical insurance, state taxes. These are things we want to track, but we don't want to be including in net income for the business. So you can see net income here and net income here for the business not affected. And then we could still track these items in this format. Now, of course, this is a kind of a bulkier looking report. So there's pros and cons to this method. We'll take a look at some other reports and how to make this nicer in a second. But one way you can make it look a little bit nicer is we can nicely format this and minimize these options. So we just see the one line item and maximize these options. As we give this to our employer, this method is nice too because we can just give these items, which are as of just this year's worth of data in one lump sum number, and or we can double click on any of them and give the year to date number. So January through December, which we probably want to do just to give the detail of it and say here, if there's any questions on what we actually spent on, we spent to the Red Cross and to the Save the Children. So you can fill that out in the tax return if you need to for the charitable deductions and that information. So we have the detailed report and we have the summary report, and it's in an income statement format, so we don't have to worry about whether it's including last year's numbers or anything like that unless we ran the dates incorrectly. So that's the nice thing about us being able to just run this report, say, hey, this is what you put in the Schedule C if it's a sole proprietor. This is what you have that I think are added deductions, and I'll give you the detailed report, double clicking, giving you the detail of each one in case you need the detail of it. And so that's a nice format to have for the tax preparation. Let's compare this to the income statement to the balance sheet now by going to the reports up top, company and financial, and take a look at the balance sheet standard. And we'll take a look at this at the date of 12/31/19, the end of the year we're working on, December 31st. Note that if we go down to the bottom, QuickBooks will include this $19,428, that's net income. And we want to think about, well, how is this working? How is this equity section working? Does it really all line up? Does it work in this? How is this relating? How is the balance sheet related to the income statement? Well, if we look at the profit and loss by class, note that we're taking the entire amount, the $19,428, not the business amount. And you might think, well, is that messing things up on the balance sheet side? And if it's a sole proprietor, note that it's all rolling into equity in one format or another. So if we go back to the balance sheet, you'll note that these amounts here, the income statement accounts that were personal, are really kind of draws. So in a perfect world, you'd think they would roll into the draws account. But in financial accounting, the draws account is only temporary anyways. In other words, all of this stuff is, for a sole proprietor, going to roll into owner's equity at the end of the day. So this $19,428 is kind of deceiving because it is representing net income, including these accounts that we would kind of call draws. But normally, this net income wouldn't even be reported on a balance sheet. It's only QuickBooks that does that kind of funny reporting, because it's trying to show us how to tie the thing out. In other words, if we change the date to the following year, if we change it to 2020, and once I refresh this report, this 19 is going to go away and it's going to be included now in the owner's equity. So I'm just going to click here. So now it's included in the owner's equity. It went away. And so just note that all these equity accounts for a sole proprietor are kind of like the same thing. In financial accounting, the same thing would happen with draws. It's a temporary account that should get closed out to the owner's equity. QuickBooks just doesn't do that because it wants to track draws separately. So just note that relationship. That's one thing that can be a little bit confusing of this method, is that when you think about the equity account, if it's a sole proprietor, shouldn't be a big deal or a problem, but you could get a little, your thinking on what the equity accounts are doing could get a little bit confusing as you look at that net income number. Just note that the net income is total net income, even though those personal accounts are really kind of draws. But for a sole proprietor, they're all pretty much the same thing. So be aware of that, and don't let that confuse you. Going back to 2019, as you see this net income number. So that's the first thing. Now we could make this report a little bit nicer. I'm going back to the profit and loss, and you might want to run this report and just see one class or the other. And to do that, you can go to Customize Reports up top, and we could go to the filters and go filter by class. We'll discuss this in more detail later. I'll just give you an example now. And then we can do this and say, I just want to look at the business items here possibly, and say, okay. So there's the business items, just showing us the business information. Now it only shows us the 5910, which isn't going to tie into the balance sheet. So just be aware that, of course, again, this number is total net income on the balance sheet that they're showing there. I'm going back to the profit and loss. If I wanted to do it just for the business expenses, customize, or to the personal, that is the business, go to filters, and then we want to choose the filter of classes, and then we want to see just the tax deductions. And this is another way we can just give this report then to our tax preparer, and it looks a little cleaner, and we can say, hey, here are just the tax deduction items. All right, so then I'm going to remove that filter, and we're going to go down classes. I'm going to remove that filter and say okay. And so here we have our total again going down to 19,428. It's also nice to note that if you have an item that could be in both of these classes, meaning let's say one of these charitable deductions was actually a deductible for the business, and for whatever reason we go, okay, we go into there, we say this, let's say the second one was actually a business deduction. So we can go into that item and we can easily change the class to business and say save and close and say close that out. And so now we've got part of it in the business and part of it in the personal. So that the ability for us to do that is pretty easy. And note that also if we have one miscategorized and we have the classes laid out as personal, 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 we know that we can easily recategorize. We can run this report and say, we ran the wrong class. I can clearly see that, and just double click on it, go into that item, and reclassify it as we need to. So that's another, if this method, if we mess up on this method and we don't classify it correctly, it should be fairly easy for us to review the reports, see the change, make the change within QuickBooks, which is pretty good about, almost too good about us being able to go back in there and adjust things. Now let's take a look at another report that might look better just in terms of the financial statements, the normal profit and loss. If we go to the reports up top, company and financial and profit and loss, we're going to go to 01/01/19 to 12/31/19, the year we'll be working on. And you'll see you have the same information, but no classes now. And this looks fine. We brought everything to the bottom. These things shouldn't be there then. These are really draws. So we have them in the income statement now. So what we might want to run a report, how can I just do a normal profit and loss and get rid of these items? And if the way we have it now, it's pretty nice because you could see just net income up top. Here's above the line net income. And here's all these items that are really personal, not business related, but which we want to track. And then here's net income after those items. So that's not too bad the way we have it here. This is kind of like the end result of our problem. So as we get to the end, we'll format it in this format. So this will be where we get to once we're done with the practice problem we work on. We could format this one though and go to customize reports and go to filters again and go to classes. And then once again, we want to filter out we want to just have the business items and then say okay. And then now we have just the business related items, and anything that has a class that's other than business isn't included in here. And that means all the stuff that we had on the bottom drops away, and now we just have our business related items, and this could be just our normal profit and loss. So that's really nice. It looks very nice format here. Just remember that you want to make sure if you use this method, first go to the classes reports here and run the report for all classes to make sure that the classes are properly allocated. Otherwise, if you filter out some of the data, you might filter out some data that should be in there. So as long as the classes are filtered out, there's kind of that added little complexity step. Then you can kind of format your profit and loss back to the profit and loss. So it looks like just a standard profit and loss, and you'll be able to track both those items. Also note though, however, that this item down here, once again, isn't what's going to be reported on the balance sheet for that time period, because the balance sheet's going to show the total. But again, a normal balance sheet shouldn't even break out the net income there. And really what the actuality of this is, that 19,428, if we look at the profit and loss and we take away the filter, well, let's go to the profit and loss by class. What that really means is that 3,000 of it should be going to draws, and the 15,910 should be going to the equity account. But then the draws is all gonna flow out to equity at the end of the day anyways, or it should. So if you go to the profit and loss, just be aware of that number there. That 19,428 really includes draws as well. Some of those should be draws, should be classified as draws, but it's all going to roll out to the equity section. So that's just some of the pros and cons of this type of method. We're going to go through now and work through this method, and this will be kind of like the end result that we will see with this data set we're working with. For more accounting information and accounting courses, visit our website at accountinginstruction.info.